Hi, guys. Welcome to the 10th episode of WTW, the weekly trading wrap up, where we talk about the week in markets from a trader's perspective, what to focus on and what to ignore. So let's begin. As usual, we start out with the S&P 500 daily chart. Okay, and this week was a fairly light week in terms of action. Um, it was the inauguration week, so Monday was MLK and the inauguration, so it was closed. So the markets were open on Tuesday through Friday. So this candle is Tuesday, Wednesday, Thursday, and Friday today when I'm recording this episode. Okay, so as you can see, it was another up day. Okay, the entire past couple of weeks was very, very hot. We had a couple of gap ups, multiple gap up days here, 1, 2, and 3. People say every gap must get filled. It did here, but it doesn't have to be right away. It could be later on. Okay, so let's not worry about that now. Um, Monday was closed, so we started on Tuesday, but it doesn't mean that Monday was without any action. Okay, we had a number of. Bitcoin was open. Okay, and as Trump came into the game and became an official president of the U.S., you can see this is Bitcoin on Monday. Okay, I don't know if you can see it clearly, but it's a big move up, and then it came all the way back down. Okay, this hype, it went all the way up to 109, 109,000, and it closed at about 102. Okay, the reason for that was because Trump was very positive Bitcoin. Okay, so over the weekend they were pumping it up, and they jacked it up on Monday, only to have it fall down the rest of the day. You can see the 15-minute chart on Bitcoin on Monday. I'm sure it's this place right here. No, it was here. Okay, this is Monday. So as you can see, every candle is 50 minutes. It ripped up all the way, like in the morning. Like we're talking about like AM. Okay, because Monday for them is 24 hours. Monday from midnight to midnight. Okay, so they ripped it up all the way at 2 a.m. to 109, and then the markets opened around 9:30 around here. It was still pretty high in the morning. It was like at 107K. Okay, but as you can see, throughout the day it tanked. Okay, only to close around these levels, the 102 level that we said before. Okay, so let's get back to the daily chart. Okay, so that's why you have this giant wick here. Okay, it broke to new highs and then it's back down. But as you can see, throughout the week, it maintained its strength. Okay, and like if you note here, like you guys, if you don't know, you can still follow me on Twitter, where I give daily updates as these is going on. Because right now I'm giving you after the fact, and it looks like I'm saying, "Oh, you should have done this back in that day," and then I'm telling you what to do after the fact. But if you follow me on Twitter here, you can see that I was very positive on Bitcoin on this day here, the 13th of January, Monday, last week. Okay. And on last Monday, I was very positive because the day it went below this critical level, but then it recovered. Okay. And as you can see, let's go to my Twitter here. That was on the 13th. You can go back to January 13th, where my Bitcoin call is teasing the breakout below support, yet it's recovering, so it's holding up. Okay. As you can see, on that day, Bitcoin was down and then came back, and I found that very bullish. It tried to cross the Rubicon here, but it didn't make it. So that to me was very, very bullish. Okay, and the same thing goes for the market. Like that same day, okay, if you go back to the SPY, this was a Monday. Okay, that same day it opened up lower, maximum fear, like extreme fear in the markets. Okay, people were scared, and the same time I was saying, January 13th. It doesn't give you the time, but it was around like 10 a.m., 10:30 in the morning, where I said you should be looking to buy. Gap down open will most certainly result in extreme fear in the market. We are close to a bottom. Okay, let's see how it develops. And then right after I tweeted, you should be buying, like half an hour to an hour after. So if you follow me, you will get daily updates. You don't have to wait for the weekly podcast, but the weekly podcast will give you an overview of what's going on. Okay. But you can supplement it with my daily ramblings, if you will. Okay. So let's go back to Monday, because even though the markets are closed, some interesting things happen, not just with Bitcoin, which was we'll go back to it. On Monday, it gapped up higher on optimism and then back down. Okay, it's a sell the news type of event, but you can see it wasn't completely dead, because throughout the week it finished much higher and close to the highs. It finished today Friday at 105,000 and some change. Okay, so it did hold its highs, which is very bullish. Okay, the another thing we should look at is the moment Trump came into power, oil. Okay, which is right here. Where was Monday? Let's give you a better move here. Monday was here, this right here. So let's do a down arrow. Okay, this move right here was Monday. So they anticipated Trump coming in beforehand, but as you can see, oil, I've been saying this all this time since the beginning, that it's in a downtrend. You shouldn't be bullish. Inflation's not going to come back. Without oil ripping, you won't have inflation. So inflation is muted, downtrend. Yes, you're going to get counter trend rallies, but then it still hasn't broken this series of lower highs. Okay, and the moment Trump comes in, drill baby drill, back down on Monday. Okay, and it continued for the whole week negative price on oil. Now we haven't determined, like, it's still stuck in this range. Okay, we haven't seen a breakdown. Okay, so this could form a higher low and then go much higher and break these levels. Then we would have to reassess. But at this point, nothing has changed. The downtrend is intact. And we could see that starting on Monday. Okay, so like what other inflation supplement is there? Well, that's the copper market. It's almost the same as oil. It's like in a downtrend. At a key level, it bounces up. Okay, but it's basically consolidating around these levels, around between $4 and let's say $5. Okay, but literally between 4 and 5 for months. Okay, and yes, it's gone up, but what happened to copper on Monday? Monday was this big down candle. Okay, for copper, it's this one right here. It's this big candle. It couldn't maintain. Okay, same story as oil. Okay, so these inflation proxies are showing muted inflation. Okay, but if you want to see directly the inflation rate, you just go to the break-evens here, 10-year break-even rate, and that is also stuck in a range. Although it is still at highs, counter trend rally from a downtrend. It's still stuck within this range. Okay, the inflation expectations are not unanchored. Okay, they're still pretty much anchored to this level. Okay, so that's what was going on Monday. There was Bitcoin, back to SPY. Okay, it was Bitcoin, it was oil, it was copper. So all these Trump trades, like people think Trump is going to be positive for oil. He's going to be positive for oil in the sense that it'll be lower and positive for the consumer, but I don't know so much for the oil companies. They'll still make money, but it won't be crazy money, like as if oil was at $130 a barrel or something. Okay, it'll stick around the $70 range. What is it exactly right now? 74. Okay, went as high as 80, between 65 and 80. It's been holding. Okay. So now, that's what happened on Monday on a non-market day. So let's go to the first market day, Tuesday. Again, this whole week was very macro light. Not a lot of macro data that came out. So the market was moving based on its own momentum, okay? And one thing we should mention is that Trump keeps talking about tariffs. Okay, we should make that into a weekly, daily, and monthly theme going forward. Okay, he's going to keep talking about tariffs being strong one day and then conciliatory the next day. Not weak, but conciliatory. Okay, he's going to talk tough. I'm going to put 50%, and then he ends up putting like 10 or 20. Okay, so you can have these ups and downs in tariff talk. Okay, so that's what happened on Tuesday. You would see this tariff action, and the market ripped on the news that this is Tuesday right here. The market ripped on the news that Trump might be a less hawkish on tariffs vis-a-vis China. Okay, so that's why it pumped up, and the market likes that. Like, as the market is not static, you will see that it will continuously react to this Trump data. But if he keeps saying bullish things on tariffs, and then, or I should say, hawkish things on tariffs, and then less hawkish things, dovish on tariffs, eventually the market, if he keeps doing it, eventually the market is not going to have any reaction. It's just going to say, this guy keeps talking the same way. We're not going to really react. Okay, but in the beginning, they will react. But the reactions will get less and less volatile, I should say, less and less erratic as time goes by. Okay, but keep that in mind. That's what's going to happen going forward. He's going to keep talking tough, talking weak, talking tough, talking weak. Okay, and eventually it's going to lose its impact. Okay, but not right now. Okay. So what else happened? The continuation. Well, we mentioned the inflation proxies before, but now let's look at the U.S. 10-year. Okay. As Trump came in, well, let's give you the overall view first, okay? We're still in a downtrend. It was broken. The downtrend in rates was broken, and now we're near the highs, okay? So here, we're still in an uptrend, short-term uptrend, mid-term, I would say, sideways consolidation because it broke the downtrend, okay? It's not really an uptrend yet. An uptrend would happen if we break the highs of like 5% on the U.S. 10-year yield, okay? And it hasn't happened, okay? So as inflation expectations go down and as the inflation proxies go down, so will rates, okay? It peaked above this level and then back down. So this is Monday. Rates have been going up this whole week. I should say Tuesday, okay? This is where we're at. So rates did go up and went up the whole rest of the week, but we don't know if it's going to continue to go up or go down. I have my suspicions that it's going to go down based on my inflation expectations and forward macro outlook. But today and for the rest of this week, it was a counter trend. Oh, it was an up move. I shouldn't say counter trend, okay? Because there is no trend now. We're in a sideways pattern, okay? Technically speaking, it's still solid. The RSI is back down to normal levels, and so is the MACD. So technically speaking, it can go either way going forward. But you know my views on inflation. I don't think it's going to go crazy, okay, despite what happens. Okay, and another thing that happened on Tuesday was that MicroStrategy again, if you know, that announced, Tuesday was here, okay? So they announced that they've acquired 11,000 more Bitcoin for $1.1 billion at an average price of 101.191. Okay, so Bitcoin here, they announced on Tuesday, which was this green candle right beside that spike candle. They announced that they bought recently, which they won't tell you when, but in the past weeks, for 101 at an average price of 101. Okay, so that knocks down MicroStrategy's overall Bitcoin price to 63,000. Okay. Oh, let's see Bitcoin here. Sorry. Going back and forth between MicroStrategy and Bitcoin. So Bitcoin here, their average price is around here, 63,000. Okay. In the middle of this range, about. Okay. So as long as it's above that, Sailor is doing great. MicroStrategy should do great. But if it starts going down and approaching this, you're going to see some very bad things happening to MicroStrategy. Although, as you know, right now, I'm still bullish on Bitcoin, given what happened 2 weeks ago on that Monday. It's recovered. Now, we want to see this break up and go higher, maybe to the 110, 115 area, okay, and more, maybe 120. That would be positive for Bitcoin and for the Bitcoin-related assets, okay? But until that point, MicroStrategy didn't do well today. But the point is that MicroStrategy is still in an uptrend. It consolidated here, back to neutral, all of the technical indicators, so it can make a move either way. Okay, I think Bitcoin goes up, so it's going to go up. Okay, but there's no guarantees. Just saying that it's very constructive, and I really like the Bitcoin action from last Monday, which was this candle here. Okay, and as you can see throughout the week, it finished higher. So that's what happened on Tuesday. Let's go back to SPY. So this was a Wednesday, a gap up day. No real macro again. So it was all driven by tariff talk and inflation rates. It looks to be easy. Okay, as you can see, the market liked the tariff talk that was a little bit less hawkish, and the positive momentum continued. Okay, so meanwhile, we had some information coming out of Europe where Christine Lagarde, the head of the EU and the ECB there, says that she will continue to ease. Okay, she will go with what the market expects, which is a couple more cuts in January coming up in the meeting and in March. Okay, so we have the EU easing, and what's going on with the EU? Well, let's even look at France, the perennial dog of the EU. Oh, it's going up. So even bad news France is still seeing a massive rip in its index. Okay, this was Monday right here. Okay, so the whole week it went up. But we are on Wednesday. So it was this candle here continues to go up. So even a perennial loser like France is still going higher. But let's see who the winner is. DAX. Yeah, DAX is at all-time highs, even better than the S&P. Okay, Europe loves lower rates. Okay, so despite all the pain that you keep hearing out of Europe, everybody's socialist, not working, the markets themselves are doing pretty well. They just love the cuts. Okay? Even France. Okay? But on another note, Japan announced that it's going to increase rates. Okay? It's having a problem with inflation, has to take that into control. So Japan is on the increasing rate path. So let's look at the Nikkei. Japan, pretty high. Still within a range, but for this was Wednesday, the market likes it. The market likes that Japan is going to get its fiscal house in order. Okay, so it's going up. So the rest of the world is pretty much catching up to what the U.S. has been doing. And some cases, like in Germany, it's even higher. But back to the U.S. The U.S. is at highs and continuing to climb. Okay, we are on Wednesday here, that little indecision candle after a gap up. We're at the highs. It's expected to have some kind of pause at the highs. No complaints, still doing very well. However, after this big move here, we usually look at sentiment, okay? And the sentiment index is at neutral. It was around here, okay? This is the close 49 as of Friday. It's at neutral. But on Wednesday it was around here. So we were at extreme fear, and this entire move here from SPY 575 to this date here, which is 605, 606, it went as high as 607, okay? This big move, 25, like 30 plus points in the S&P 500, which we expected that snapback rally, caused the sentiment conditions to go to neutral, okay? So that what we were buying here, we were unloading. I was unloading a bit this week, okay? However, if you saw the past episodes of WTW, you would see that I expect us to go to this target range of 620 to 630, okay? That's my target. Doesn't mean it has to happen, but based on the conditions, the extremely oversold conditions in a bull market, okay, that we saw here, I was expecting a big snapback rally, and conditions to go to greed again and approaching extreme greed. Here's where I'd probably be selling the majority of my long positions, okay? I've been unloading here, but here I've been selling the majority. Now, it doesn't mean it's going to go in a straight line. We were lucky. It is a straight line now, but it might consolidate, come back a bit in the weeks to come, and then up here. We do have the Fed meeting next week and coming up, so we don't know what the catalyst will be to get here, but if it does get here, we will probably be at extreme greed or right on the border of extreme greed and greed on the sentiment index, and we will be probably going to get another pullback to the breakout highs before ripping up again. That is my base case scenario, okay, because nothing has changed in the macro, meaningfully, that is. So I wasn't expecting this straight up move, but that's exactly what we got. Enough to burn up half of the fuel from extreme greed to neutral, okay? So what is this telling you? This is telling you that right now I am not a buyer of stocks, okay? Here I was a buyer of stocks. And I've mentioned it. If you went to my Twitter, you would see. You should be buying, okay? January 13th, okay? But as of right now, you shouldn't be buying. The risk reward is not there. Here we had a 30-point risk reward, and you could have bought options. You could have gotten a 4-to-1, which I did on certain options on spike calls. You got a 4-to-1 return here, okay? Getting out here. So the risk reward when it's at extreme fear is massive. Here, it's nothing. It's not even 1-to-1, okay? We already gave up 30 points, 35 points, and we have, another 10, 15 to go. It's not enough. You know, the risk is here and the reward is here. It's just, it's a coin flip. You know, this is not the kind of scenario where I like to deploy a lot of capital. Okay, the time to do it was then, and you had the warning beforehand. Now is not the time. You should be selling what you're buying around here. In fact, I started buying around this area here. Here. Okay, expecting a big bounce up. Okay, and bought even more here because here we had some extreme conditions, not super extreme, and here confirmed it. Okay, and you have a double bottom, which is you have the perfect technical pattern here, and the measured move from here is about 630. Okay, the measured move, technically speaking, is you take the height of the double bottom and then you project it higher here, starting from here. So what is it? 575, and the height was 608. So 35 points here. So 6. I was being conservative here. 640 would be the target, the measured target. Okay, so this target range is actually conservative if you look at the double bottom technical projection. Okay. So that's what happens on Wednesday. Don't be a buyer of stocks here. I mean, you could if you want to be short term and get out in a day, but I don't do that. I like to hold things for weeks. Okay, so here I didn't expect this up move, but I was expecting to hold this for weeks, maybe a month. Okay, that's how I trade. I mean, you can take the information and do with it as you will, but for me, I'm not buying anything here. Okay. So now let's go to Thursday. What happened on Thursday? Just the big thing, every Thursday, we always look at initial claims. Okay? And the initial claims came in at 223,000, which is higher than 217. And it was higher than expected. Okay, they were expecting more than that. So this is not what we want, although it is still within a range, nothing to panic about now. Okay, so initial claims at 223K is okay right now. It's not really ramping higher like in panic mode. So this is telling us that, okay, maybe put in a red flag, or not a red flag, but maybe a light yellow flag. Okay, like here we would have the yellow flag. This was like crazy, but 260,000 initial claims. Okay, but as you can see, it has to be a sustained rally. It can't just be 1 week. Okay, so here we have 2 weeks going up from the lows. You can have that here and not panic. So we're in a range. Let's give a little bigger view here. See, we're still in a range, 23, 24, nothing crazy and nothing to panic about. Okay, so I wouldn't even put a yellow flag. I would just call it a slight, very, very, very light yellow flag. Okay, so So that was initial claims, and continuing claims was the same thing. They went higher. Okay, the continuing job claims, so they went much higher. They went to 1.9 million, and this is from at 1.85. But if you look at the 3-year, we're still around this range. It's going up. Continuing claims from 23, and 5-year. Let's just look at this year, because 2020 distorts things. So as you can see, it's still within decent levels. It's not crazy. Okay, so that was the big thing that happened on Thursday. Nothing real. That was pretty much the only thing. And the market was up on, I guess, fumes. The continuing fuel that has been burning here to get it from extreme fear to neutral, that fuel was used up even more on Thursday. Okay, so Friday was basically a consolidation day, nothing big. Okay, remember next week is the Fed meeting, so maybe they try to sell some stuff before the Fed meeting, lock in some profits, profit taking, whatever. Okay, but Friday was pretty much a nothing day, although we did have University of Michigan consumer sentiment, which we do look at. It is a leading indicator. And the sentiment went down to 71.1 from 74. So consumers are less confident, okay? 3-year average, you see it's going higher, but these levels, 70, 50, 70, are pretty low, okay? Like if you look at maximum levels, they tend to go as high as in the 90s, and 100 is a very high consumer sentiment figure. That means they're very optimistic of the economy. Here, they're still meh about the economy, okay? But the trend is up, even though today it went down. Okay, so nothing real. It's still low, but nothing really to panic about. Okay, we should be looking for it to go higher. Okay, so that was the consumer sentiment figure for Friday. It helps with our macro. And the other thing that came out was existing home sales. We can ignore it. It's a coincident indicator. Forget about that. So what we learned this week is that a lot of the macro that did came out, it wasn't that much. We had initial claims, we had consumer sentiment, and nothing else really. Nothing else. Okay, so those are the two very light, weak macro data. They went against what we would like to see, but not that much. Okay, so pretty much still in the middle of our range for the macro data. We also learned about that Trump would go back and forth with the tariff talk. Sound hawkish one day, dovish the next, but he will lose his impact. It would lose his impact as he keeps doing it, because he's just going to the well, okay? And the market will just discount that to zero after a while, okay? So we also saw that the inflation proxies, oil, back down, still in its downtrend. Nothing has changed there. And copper still stuck within a range down this week. And nothing really much to say about the inflation figures here, okay? So the key takeaway is that at this point, it's different than what we were saying 2 weeks ago. Okay, we are at neutral conditions. I sold some stuff, okay? Before we talk about that, let's also talk about gold. We haven't talked about that in a while. I'm very bullish, same double bottom type pattern on gold. And this was the Monday right here. This was the Monday right here. Okay, let's use an up arrow instead. Okay, very positive week on gold. Okay, very positive week. Approaching the highs. Now, it could pull back. Let's see, technically, we're getting a little bit high, but it doesn't really mean much at this point. We could hit it, go back down, form some kind of cup and handle, although this is double bottom now. Some type of cup and handle formation, maybe go back to the 2720 level, because now we're at 2771, okay, on Friday. So gold is doing very well. GDX, the miners, suck still. I expect this to go up if we're going to either get a snapback rally or this is going to be a dud, okay, for the miners. I expect a snapback rally as gold continues to go higher because now people will see that it's actually real, okay? So we haven't seen gold in a while, but I am still very bullish on gold. Nothing has really happened. So keep an eye on this. This is boding very well for our gold positions, okay? It's like a fire hose waiting to explode instead of when you're talking about the gold miners. So we should mention, we haven't mentioned in a while, so I'm still bullish on gold. Okay, again, we could pull back, make a sort of a cup and handle before it goes up, but I am still very bullish on gold. Something is happening. Central banks around the world are still buying it. They're seeing something that we don't. You should be long. Okay, you should be long-term gold. You should always be long gold, physical gold, for the long term as an insurance hedge. We've talked about this in the beginning. There are academic studies that prove that a portfolio that has 10-20% gold, physical gold, and the rest stocks outperforms a portfolio of just stocks. Okay, so you should be long gold regardless within your portfolio. Okay, so going back to SPY, what the key takeaway that I wanted to say as I was signing off is that it is much, much different than just 2 weeks ago. Things change very fast in this game. So now we're at neutral conditions. I'm not a buyer here. I am a seller, and I will continue to sell as it reaches my target range, okay, if it does that. I'm expecting a pullback because we're getting a little bit crazy here. I bought a little bit of protection with puts, but I expect those puts to expire worthless, hopefully, as the market continues to go up, okay, because nothing has changed, okay? The macro still hasn't changed. We're still going bullish, okay? And the prevailing market narrative hasn't changed either. Do you remember the prevailing market narrative? It's this. Strong economic data leads to higher inflation expectations. People still think that inflation is going to go up, okay? Which leads to less future rate cuts. Although recently that inflation expectations have gone down, but it's just one print. If we continue to get CPI and PPI and PCE to go lower or get cooler prints, this whole narrative will get destroyed and turn around. So less future rate cuts, bad for the stock market, and prices go down. That's the current market narrative. It's still there. It's been hit. It's been taking some damage as this is going up, okay? But the current market narrative, there's so many things wrong with it. We discussed it before, but the fact is that they still believe it. People are still skittish about inflation, okay, and they're looking for it. We have to get to a point where they don't care about that before I think the market really crashes. But until this point, it hasn't been reached. We're in a bull market. Stay bullish, okay? There's nothing really more to say. Looking forward to next week. And again, stay bullish.